Okay, guys, welcome to High Level Option Mentoring. My name is David Valliere, and what I'd like to do is just thank you guys for being here. I know it's difficult to make time for these kind of things, but I think you're going to get a ton of information out of this, and I really want to make this the very best option mentoring program available anywhere. So what we're going to do is just go around the room and everyone kind of introduce themselves. We'll start with, we'll go from left to right, so we'll start with Roy. If you want to, you can just mention a little bit about your background and also your trading experience.
Okay. My name's Roy Becker. I live northwest of Denver, Colorado. That's what I do for a living. What I'm hoping to do is to get to a point where I'm, to doing trading. So I've done a little bit of options trading, but not a whole lot. Basically, making calls, making puts. That's about it. So my knowledge is real limited, and but it's been detrimental enough that I've lost a few bucks trading. So I kind of want to turn that around. And I saw Dave's information. I've been a member, I think, for a year or 2 years now with Dave, and kind of like what I've seen. And I've kind of been taken to the cleaners with some other programs that have been out there. And Dave seems like a pretty straight up guy, so I decided to go ahead and join this and see what I can learn.
That's great, Roy. Yeah, we've all been there as far as losing. The trick is to win more than we lose, I guess.
Yep.
So great, thanks, Roy. Tim?
Okay. Well, I'm also kind of looking towards a little retirement here in the very near future. But currently, I'm the president of an IT company. Been doing IT work really since the '80s. So that's really my background, and it's more in kind of the analytical stuff and the statistical stuff and problem-solving kinds of things. So maybe that's why I'm kind of attracted to I guess kind of what we're going to be learning here soon, and kind of that whole approach. So more of a numbers kind of a logic guy, I guess. So that's where I come from. As far as trading goes, I also have been a member for I think a couple of years now, and I've also been involved in a couple of other newsletter program kinds of things that have kind of since fallen to the wayside. So, Dave, you're pretty much the source of information these days, and I almost exclusively trade options, and I've really been, I guess, kind of following along in your in your trading, done a little bit outside of that, but not an awful lot. And I guess the last thing is I've got a couple of your programs, your video programs. So I managed to suffer through a couple of those really long ones that are get pretty dry. But
Yeah.
I've got them for reference. So as we go through this, if you say, well, gee, refer to I forget the names of them, Trading as a Pro or whatever they are, winning, I forget. But anyway, I've got a lot of background information from you. So that's pretty much my story.
Well, good. Well, welcome. And Tony?
Yeah, my name is Tony. I live in South Florida, and I've been probably trading. Well, I was doing stocks primarily. I would say probably since maybe 2010 or so. But then into options maybe a couple of years ago, because I'm still working a day job, and I just found that options just gave me more of a little bit of a flexibility with the market versus just straight equities. So, and I've probably been with the Tradeology program now for coming up on probably a year or so. I lost a little bit on that DIA and IWM trade, but I'm still here, so that's good. And I also have the Trading as a Pro course, and when I saw that and I went through that, that's a lot of material, and I could see from just the way it was outlined there that Dave, that what you're doing and what you're talking about, so much more than so many of the other people that I've seen as far as the approach that they take. So that's why I decided to sign up for this, and I'm just trying to find my own methodology that I can use. I'm just trying to figure out how to fish for myself, basically. So
Sure.
that's pretty much why I'm here.
Great. Well, thanks, Tony. I think one of the I'm getting feedback here. Hold on. Can you lower your speaker just a little bit, Tony? One of the problems with doing videos, and as much as I love doing them, there's always a nuance, or there's something else that's changed, or something that is very difficult to communicate just from sitting in front of a computer and recording your screen. And so that's why I decided to start this group, because doing videos is really just a one-way communication. You can't get the feedback that you normally would in a training situation if you were in front of a live group. And so I want to try to make this, of course, this is going to be much more interactive, so that you're going to be able to give me feedback, and I'm going to be able to hopefully answer all your questions and communicate those nuances of trading, so that you can develop your own plan and then go forward and be successful trading. It's very, very difficult. I mean, if you're sitting there, even if you watch the videos, and I know a couple of people who watch the videos several times, and they still have questions, and I still get questions from people who got the videos back in 2008, and they're wondering, what's changed, or I said something in the videos that they wanted clarification on. And to be honest with you, I haven't seen the videos in years, and I can't even remember much of what I spoke about, but all of the knowledge is still in my head, and I've really changed the way I've traded since those videos came out. I think I've simplified it a great deal. But thank you, Tony, and welcome. Scott?
Can everyone hear me?
Yep.
Oh, okay. Well, I'm a guest here. Dave asked me to come and be a guest today. It was kind of spontaneous because we're both looking at charts today. Anyway, I've known Dave since 2002?
At least.
Yeah, 2002. Dave introduced me to internet marketing, and I don't know how many of you have been a part of his list or how long you've been following Dave, but we did some information product development back then. We did some some joint ventures, and that eventually led into doing really well with internet marketing, and eventually started a service back in 2006, a content writing service, and that's what I currently do. And at the same time, I also trade. I trade off and on, and so Dave introduced me to trading. It was probably 2008 or 2007, and I started trading the futures, YM, DX, just pretty much following Dave's lead. And then I kind of ventured off and went into learning how. I thought I wanted to learn technical analysis, but then I got more into wanting to read price action, mainly from a supply and demand perspective. There's tons of information out there about that stuff, but I eventually ended up at a particular website that I called home for 3 years, and I developed a method of price reading that I use today, along with some other methods that are very similar. So I'm always learning. I love to trade, but The thing that I find with trading is it also requires a lot of self-control and patience. And if you have issues with that, you should probably get on top of them, because it's a great profession to be in, but at the same time it can be very frustrating. So how's that?
Good, good. You're a very active trader. So Scott and I sit down and analyze the markets together during the day, and we kind of bounce ideas off of each other. But Scott's got an incredibly analytical mind, and he's a great price reader. Phil?
I actually live in North Carolina, but it shows me being in Pennsylvania now, because unfortunately, when I'm a project manager in nuclear plants, so when I work, I have to travel, which is a lot of the motivation for wanting to learn to trade better. I've been doing it off and on probably since '99. I've done some commodity trading. I love the option trading. I love shorting things for some reason. Seem to get a big kick out of that. But basically, I'm looking to do this full time and looking to get out of my current line of work. So I love the trade. I just want to learn how to do it more successful on a consistent basis.
Gotcha. Whereabouts in North Carolina are you?
I live in Southport, very southeastern tip, right around Oak Island, where the intercoastal comes out.
Gotcha. Yeah, that's a nice area. I spent quite a bit of time in the Chapel Hill area. We used to go down there once a year and visit some friends.
Yeah, it's a nice area. That's probably 2.5, 3 hours from me.
Oh, okay. Mm-hmm. Right, good.
But yeah, very familiar with it. My daughter's she's 14, but she's actually spent some time at UNC Chapel Hill there for various programs.
Okay, yeah, I like that area a lot. It's a very nice area. Well, welcome, Phil.
Thank you.
Jay.
Hi. Yeah, I'm in Washington, D.C., and I basically, I've been trading stocks and investing, not just trading, and I'm more interested in options. I saw your, early videos, 2008. Understood some of it, was confused by a lot of it, so I would say I'm, looking for how to consistently make money with options. I don't want to do daily trades, but more the monthly trades that you talk about. I have done some of them, and I never quite get it, so I'm looking to learn how to do this again, as previous guys said, on a consistent basis, and make money with it rather than sometimes yes and sometimes no.
Right, sure. That's great.
Hey, Dave, this is Phil. Let me just pile onto that.
Sure.
I have been also following your monthly income trades, and I've been mimicking everything you do, but I'll be honest, I don't have a clue what I'm doing.
Gotcha. Well, that's like I said, this is one of the reasons why I wanted to start this group, was so that we could get feedback from each other, and we can discuss the finer points of trading and exactly why I'm doing certain types of trades, because it's not always clear. Even if I communicate something on the website, even though I've created the videos and I've shown people what we need to do in order to create monthly income using options, it's not very clear. There's always a question in somebody's mind, and so when putting this group together will give us an opportunity to share and put everything out on a level playing field, so that we can all share information and we can get to the finer points of trading, so that you have the skill yourself in order to be able to put on the trades, understand exactly why the trade was put on in the first place, and what the bigger picture is for trading with options, especially for monthly income.
If I could add to that, Dave.
Sure, Roy.
In the past, you're absolutely right. In the past, even some of the trading that I've done, it's been nice to like network with somebody or some people, and even, talk to them about maybe some of the things that they were doing at that particular time or weren't doing based on what the market was doing. And it just seemed like, you're kind of on an island by yourself, because there's nobody to hold or network with. So, I mean, this is a great opportunity, to be able to, like I said, network with other people, pick their brains and ideas. So it's great.
Yeah, absolutely. I agree with that. I think we all agree with that. Really, from 2008 till about 2011, all I did was trade full time, and but it's a lonely occupation. I mean, you sit at the computer, you're trading, and it actually gets kind of boring. Once you understand how to trade, it's kind of mechanical almost. And so that's why I started Tradingology, so that I could start, discussing trading with other traders and begin teaching again. But it's a very lonely occupation, and it's good to have a couple of people that you can talk to on a regular basis, like I talk to Scott quite often about different positions I have, and make sure I'm looking at the right things and just kind of bouncing ideas off them. But thank you, Jay. Whereabouts in Washington are you?
I'm in downtown area, Logan Circle.
Oh, I have a home just in the West End on 21st Street.
Oh, really?
Yeah.
I'm on 13th. Yeah, 13th and M. So yeah.
Well, that's awesome. Yeah. Well, next time I'm down in Washington, I'll let you know.
Yeah, that'd be great. That'd be great.
Cool.
I would also want to add, I know you spent a lot of time, like you said, being a full-time trader. I'm wondering, what that life is like in terms of how much profit should you be expecting, and how much time should you invest in that.
Yeah, we'll get to that. I think that a lot of traders have unrealistic expectations about what it takes to become a full-time trader, and that answer is really different for just about everybody. I mean, if you're making $20,000 a year now, in your job, then, and you have absolutely no debt, it would be reasonable. There'd be some reasonable expectation of making a full-time living, trading. If you're making $100,000 a year and you have a great deal of debt and other obligations, you have a young family maybe, that picture changes. So you either have to have a very large portfolio to start with, but it's all relative. So it's all very, very different for each individual person.
Hey, Dave,
Yes, Roy.
if I could ask you a question, we've all kind of gone around and given a little spiel about it yourself. What are you hoping, or what are you expecting to like get out of this, or or whatever, so that at the end of the however many sessions, you can maybe declare whether it was a success or not. I mean, what are you looking to get out of this with us guys?
I'm going to answer that question in just a second, Roy, but we have one more person here that just joined us, and I believe this is Gerald, but I'm not sure. Let me just get to Gerald, and then I'll answer that question.
Sorry, he just popped up.
Yep. Hi, is this Gerald?
Yes, can you hear me?
Hi, yes, I'm sorry I had to mute you because there was quite a bit of noise in the background there, but yes, welcome.
Okay, yeah. Sorry I was late. I had a pump guy here. We had some issues with the well, so.
Oh, okay.
I'm just, yeah. But, I heard a little bit, kind of the same story with, like everybody else. I've been, some success, and then give it back to the market, and want to just kind of fine tune it and be more consistent.
Right. What are you? you?
I have followed other, gurus or whatever you want to say, and I will say this, at times their program works pretty good, and other times it doesn't, and I'm sure everybody, feels the same way.
Right.
And so, yeah, I'm interested to see where we can go with this.
Terrific. Are you currently working, or are you retired, or where are you in?
Oh no, I'm currently working.
Mm-hmm.
Kind of a farm/marketing situation, and so that's why my schedule kind of gets torn around. Usually Thursdays work best for me. I don't know how everybody else is, but like I said, had this thing crop up with the well, but hopefully, that's in the past now.
Okay, great. Well, welcome, Gerald. As I mentioned to everyone in the beginning, we are recording this. So, just if you want to share something, that's great. But just remember that it will be recorded and put into a section of Tradingology just for the high-level option mentoring group. So you can go back and review these later. So don't share anything that you want to keep private, and because they will not be edited. But we also, of course, want to talk trading, and we want to be able to help you personally develop a trading plan. So, Roy, let me get back to your question then. Basically, what I want to see out of this is how far I can. I just want to see how far we can take this group to be independent. I'm not sure. There's somebody making some noise. Can we? Yeah, sorry, Gerald. I had to mute you. There's some noise in the background there. I just want to see how far we can take this group with interaction rather than just videos, because I was thinking about doing a second set of videos. I was thinking about doing a trading as a business or a trading pro system, part 2 or something like that. But I felt that another set of videos isn't really going to get to the core issue of trading, which a lot of it is very, very much psychological. And there's also some specific techniques that are so nuanced that you wouldn't be able to pick it up in a video, I don't think. And so my goal is to get each and every one of you to understand, number one, the basics of how to trade successfully, but also share with you the system that I use, and hopefully we can, you'll be at the point where you see me do a trade and you'll say, yeah, I know exactly why Dave is taking that action or taking that trade at this point in time. And hopefully, whatever happens to me, if I decided to leave Tradingology and not do it anymore, or I decide to actually retire eventually. I doubt if I ever will, especially from trading. But you'll be able to make your own trades, understand exactly what dynamics and how to read the market so that you can do your own trades, and then be successful with managing your portfolio, especially with monthly option trades or any kind of trading that you're doing in the future. If I'm not here, if I can just transfer my knowledge to you, everything that I know, directly right into your brain, if there was like a USB from my brain to your brain, I just want to transfer everything that I know to you. And then with your experience and with your background and with your understanding of it, create a system of your own that you feel really comfortable with, that gives you a great deal of confidence to go forward in trading. Because once you lose your confidence in trading, then you're done. I mean, you're just absolutely done. You can't pull the trigger. You're too afraid in order to make a wrong move, and that's not successful trading. Or even looking to someone else to do the trading for you, to look at another guru, to look at someone who has trading experience, or to join another membership site in order to tell you what to trade. And So my ultimate goal is to make you totally independent, confident traders.
Okay, now I can.
Yeah.
I can hear you, Dave.
Yep. It just went completely dead.
For how long?
About 10 seconds, 5 seconds.
Okay. Okay, so...
I heard you all the way through, so yeah.
Okay, great. So my goal, to summarize, is to make you, hopefully you'll be able to understand exactly how I trade, the way I trade, incorporate it with your own experience and your own background and your own personal preferences so that you can become a confident, independent trader of your own and successful in this business. Are we still good?
Yep, good.
All right, great. Tony, you still with us? Oh, hey, Gerald.
I'm still there.
Hey, Gerald.
Yes, can you hear me?
Yeah, you got something going on in the background there.
I'm on my iPhone with a headset. Maybe that's what's going on.
Oh, okay. All right. So in this session, what we want to do is introduce everybody, kind of get some idea about your different backgrounds, and then begin to work on your trading plan. So it sounds like most of you guys are interested in trading options for monthly income. At least that's what it appears like. Is there anybody interested in other markets, trading other markets like futures or currency or just stocks?
I personally am interested in other markets. Yes, I love futures.
Okay. Have you traded futures before, Phil?
I have.
Which ones? Which market?
Oh, and maybe I'm misstating. I've traded commodities futures
Okay.
mostly.
Okay, so like wheat or soybeans or something like that?
Yeah, I've done pretty well. I had a good streak a few years back where I did real well in sugar. I've done good in, different cocoa, that kind of thing. But I love commodities for some reason.
Okay, cool. Yeah, I did a lot of trading in natural gas, U.S. dollar index futures. Didn't really get too much into wheat, soybeans, sugar, that kind of stuff. But I've looked at charts. I really kind of like that market. When trends start in those markets, they tend to last a very long time.
Yes.
It's interesting.
How about gold, silver? That's commodities, isn't it?
Yeah, definitely. Gold and silver is a great market. I've done really well in gold. Not too much. I haven't done much in silver, but I do like to trade gold futures. Boy, those things can move, and gold futures can be very volatile. And when they move, boy, you can make a lot of money very quickly, or you can lose a lot of money very quickly. Anybody else? Mostly options?
No, I guess, yeah, mostly options. I guess I'd jump in and say futures, I'm not really that, I know what they are, but I don't know much beyond it. So I don't know whether that's, whether that be something or not. So it's more about not knowing rather than saying, no, I don't want to go there.
Okay. Yeah, personally, the way I'm trading today, I trade almost strictly the YM, the Dow Mini Futures.
I think one of the hesitancies for me on that would be, like a lot of other people, we've got other things going on, other jobs. I'm not sitting in front of a trading screen all day. So
exactly,
that's my perception of when you trade futures, you've really got to be focused on it and pretty much dedicated to it.
I used to trade very heavily in the futures market, and that described me perfectly. I mean, I would sit in front of the computer from 7 a.m. Eastern time until, 4:15 Eastern time every single day, and I was trading 20, 30, 40 lots at a time, contracts on the YM. And I would be very, very active, and I made great money. I mean, I would make $7,000 a day. But it took its toll. I mean, it's very, very stressful. I branched out into natural gas, gold. I did gold for a while. I got my head handed to me in natural gas a couple of times, especially when the numbers came out for supply in the morning. And, it whipsaw one way and then whipsaw the other. And, I'd easily lose $4,000 or $5,000 in 30 seconds. But the YM was always really good to me. And so that's kind of why I'm sticking to it. Today is quite a different story. I trade from about 9:45, because I don't trade the first 15 minutes of the futures markets, until about 11 a.m. And then from 11 on, I really don't look at the market. So I trade for about an hour and a half at the most. And, I'm done for the day. Most of the really good setups in the futures market, in my opinion, in the YM, happen between 10 and 11 a.m. So I guess if you were going to do any kind of trading at all, I'd look at that hour if you can. If you can't, that's no big deal. So let's there's two things that I want to get done today. Well, three things. We already did the first thing, which is introduce everybody. The second thing that I'd like to do is just get any burning questions that you have out of the way. So if anybody has a question specifically about trading that you'd like to have answered right now in today's session, something that maybe was on the back of your mind that you thought of as you came into the session, or something that's been on your mind for a while that you'd like to ask me, we can get that and do that right now. And then finally, the third thing that we're going to do today is start the trading plan. We're going to put together a trading plan. So let's go to the second part of today's session, and that is any burning questions that you guys have specifically about trading, or any setups that you see, or anything to do with trading. Or you can ask me any personal questions if you want. I don't mind answering personal questions either. But any questions that you have at all.
I have.
Go. Yeah, go ahead. I'll wait.
All right, Phil?
I was just going to ask. It goes back to the earlier introduction thing. So I'm following along with the monthly trades, the monthly income trades, and I guess what I'm not getting is, are we making premium when we're putting the trade on, or is it a combination of getting a little bit of premium and waiting for the trade to play out? I really don't understand what we're doing.
Okay. That's a really good question. And it's kind of, actually there was a post, and now it's in the FAQ section, or it's in the it's on the page with the spreadsheet, the XTR spreadsheet. There was a question that somebody asked: what was the difference between the monthly income trades that I did in 2008 and the ones that I'm doing today? Did anybody read that post?
I did not.
Unfortunately, no.
Okay. So let me actually call that up on my computer here, and I'll share the screen with you so I can show you exactly where to go. I'm going to read the question to you, and then I'm going to share the answer with you, and also add a few additional details. So if you go to the Tradingology spreadsheet download, it's the XCR Signal spreadsheet download. There's an FAQ underneath it, and basically the question was, in the modules for trades were placed iron condors on the diamonds and the SPY based on the technical charts. The goal is to figure out where the indexes would not reach within the time frame, and adjustments would be made if they came close to those levels. So my question is, why is that strategy not being used for the current monthly income trades? And would that not provide the same outcome like butterfly trades that are being done now? Or are these trades better? So basically, so what I told him was that, the Trading as a Business videos, or the Trading Pro system as it was relabeled, came out in March of 2008. And since then, most of the trades were iron condors, double calendars, put debit spreads, call debit spreads, ratio spreads. There was a couple other spreads that I used at that time. But what happened was, as volatility got extreme in 2008 and 2009, the adjustments that you needed to make in order to maintain your your income tent, became much harder to maintain. In many cases, the adjustments turned out to be very expensive, because not only did you have to make the adjustment, but you're paying the cost of the trade itself with commissions and everything else in order to maintain the adjustments. And so what I wanted to do was I wanted to be able to simplify the ability to put on the trade and then only do a single adjustment. So rather than multiple adjustments, because sometimes the adjustment itself would wipe out, and the commission costs of the adjustments would wipe out the actual profit that you had on the trade, depending on the number of contracts that you were using. So rather than using support and resistance levels, I'm sorry, I'm going to have to stop using my screen for a second here. Instead of adjusting and using support and resistance areas in order to determine when to make an adjustment, we're using XCR Pro spreadsheet now to determine when theta is cheap, when premium is cheap, and when premium is expensive. So we want to sell it when it's expensive, and we want to buy it when it's cheap. And so almost every single type of spread that I do today is either buying premium when it's cheap or selling premium when it's expensive. And what that means is that when premium levels are very, very low, you want to buy either a put debit spread or a call debit spread. And what it does is it allows you to buy premium cheap, because in a debit spread, you're going long a call, or you're going long in a put debit spread, you're going long a put, and you're selling an out of the money, further distanced either call or put. And when premium is very expensive, you want to sell the premium. So you want to do a credit spread. So you're either doing a put credit spread or a call credit spread. Now the adjustments come in when you've got this debit spread or you got the credit spread, and the market moves in your favor one way or another. You adjust it once in order to turn it into a butterfly. And what happens is that you create a tent around specific levels and strike prices in options, in the option chain. And it automatically creates like this perfect tent, so that you only have to adjust the trade that you get into one time. And you don't have to constantly adjust this or constantly adjust that. So almost every single trade that I'm entering into now, will eventually become a butterfly. If you've seen the profit and loss graph for a butterfly spread, it's very forgiving. The wings on both sides of a butterfly have very limited loss. There's very little risk to them. And the middle of the butterfly is where you generate the majority of the profit. And so you can, and then there's, we're going to get into specific details, and I'm going to show you exactly how certain trades are entered into in order to do this. But most of the time, if XTR Pro spreadsheet is telling me that the market is going up, what I want to do is I want to buy debit call spreads. When those become profitable and it looks like the market's ready to pull back, I want to turn it into a butterfly, which essentially locks in the profit that we have in the call debit spread. And at the same time, I don't have to worry about it again. I just let it go basically to expiration.
So let me just put a point on that. Is so the goal then is to run these options to expiration, pretty much.
Pretty close.
Unless there's something else that jumps out.
That's right. Pretty close to expiration. The only time that I would get out of a spread before expiration is if there's absolutely no premium left in the short options, and there's a chance that the market will reverse to the point where they would be in the money at expiration.
That's all based on, obviously going to be based on the spreadsheet. Well,
That's correct.
part of that. Yeah.
That's correct.
Yep.
Yeah. So there's I don't have the book here, but there's a book that was out a couple of years ago by this guy who was a floor trader on the CBOE, and I can't remember his name now, but I'll get the book for the next session. Basically, he wrote something called the pregnant butterfly. It was a strategy that he used in order to build up butterfly spreads over many different strike prices on both the put and the call side, which basically could not lose money. And so I looked at that strategy and I thought it made a lot of sense. And I started using it with XTR Pro spreadsheet in order to determine when to enter into a new butterfly spread. The great thing about this particular strategy is that you can enter them both on the call and the put side. It doesn't matter what volatility is at the time that you put them on. The only thing that matters is the premium levels. So if premium levels are high, then you want to sell. You want to sell a credit spread first, and then adjust it so it becomes a butterfly. And if premium levels are low, then you want to do a debit or a call spread. And then when it moves in your favor and you've got a little bit of a profit, turn it into a butterfly. And in those cases, you're basically locking in the profits that you have and giving yourself an opportunity for more monthly income than you would have. And it doesn't matter at that point. Once you've locked it in as a butterfly spread, it doesn't matter if the market moves up or down. Basically, you can set it and forget about it.
And would it kind of follow that if once you turn into a butterfly, your profit and loss are kind of controlled or not going to have wild swings? I think I heard you say.
Yeah.
If that's true, then depending upon your personality, but I would be more inclined then to have a higher number of contracts than I might otherwise have if I wasn't using that strategy.
Yeah, I mean that kind of makes sense that but almost all of the butterfly spreads that I enter into are legged into. So generally, and I want to create more of them than one of the things that I wrote about that is still true in 2008 in the videos was that you don't want to concentrate your risk. You don't want to have a concentration of risk. And basically, by adding more contracts than you normally would at one particular strike price, concentrates most of your risk around that strike price. You also don't. Let's say you didn't know where the market was headed. You didn't know if it was going to go up or down, and nobody does. The idea behind using theta prime, which is the part of the XTR's Pro spreadsheet, is determine whether or not you should do a credit spread or a debit spread. And that's basically it. And leg into your butterfly. So once you've got a little bit of a profit, you want to leg into your butterfly, and once you put the adjustment on so that it's a butterfly, you can forget about it and then go on to the next trade and do the same thing with another trade. So you have to think that in a given month, you may end up with 10, 20, or 30 contracts, let's say, across a number of different indexes. But if you were trading without this particular system, would you trade 10 contracts at one strike price? Probably not. Because at the end of the month, you're going to be trading, you're going to trade one. So let's say, even if you had a very large portfolio, for example, let's say you had $500,000 in your account, then yeah, you could do probably 5 or 10 contracts for each trade that you went into. Because at the end of the month, you might end up with 50 or 60 or 100 contracts. As the market moves, you want to create another spread. So let's say the diamonds are at 190, and so at that 190 strike, you're going to put on a credit spread. Let's say you're going to do maybe the 190, 195s. If it moves down to 185, then you've got a profit on that, but you want to lock it in at the same time. So you sell you sell another of the 190s, and you buy the 185 call, or the 185 call. So essentially, you're locking in your profit, and then you want to move on to the 185s, which you just bought, and you could create another butterfly on the put side of that.
Yeah, I think I'm okay. That's a little clearer than it was before.
Okay, good. See, the nice thing about being able to do butterflies is it doesn't matter if it's puts or calls. I mean, really, you have to assume that you don't know which way the market's going to go. All you know at any particular time, and whether you use XTR's Pro spreadsheet and the Theta Prime, or you simply use the VIX, it will tell you when premium is cheap and when it's expensive. And the most important point of the videos I did back in 2008 was that you really can't tell which way the market's going to go. So how are you going to profit? And most of the strategies, especially option strategies, are built around the fact that the market has to move in a certain direction in order for you to profit. And what you want to do is try to eliminate that. You want to do it based on, you want to create the type of spreads that make money for you, whether the market goes up or down. You just want to be able to buy. You want to buy options when they're cheap, and you want to sell them when they're expensive. And they're expensive when volatility is much higher, and the premium levels across both puts and calls are much higher. That's when you want to sell options. And when volatility is low, you want to buy options. And by creating these types of spreads and then turning them into butterflies that you can do both on the call and the put side, you're creating an income tent And once you put the butterfly in, basically it doesn't matter where the market goes. You're still going to be profitable. And if it moves outside the tent, you're going to just create another butterfly spread. And the chances are the only time that you would have a difficult time making money with this is if the market moved very fast like it did in the Trump rally. That would be much more difficult because you'd be... But at the same time, since premium is coming down, you're going to be buying call debit spreads as it's going higher. You see, because premium is being taken out of the market. So you want to buy debit spreads. You don't want to sell, you don't want to do credit you don't want to do credit spreads. You want to do debit spreads when the market is moving higher like that. And then you just turn it into a butterfly, and basically you've got a risk-free trade that can run to expiration.
But theoretically, when you're putting the butterfly on, you're locking in profit, so you should be showing a profit at that point, correct?
Right. So I leg into the butterfly, Phil. So I do the debit spread or the credit spread, and then I turn it into a butterfly. And at that point, I can forget about it. That's the last adjustment I'll make.
Okay, which you've done recently.
That's right.
Right. So that's what I'm not getting, and it goes back to I forget who asked the question, if it was Roy or the other gentleman, but regarding the number of contracts. So basically what I've been doing is I've been following exactly your trades as you put them on. So within minutes of you sending out a text alert, I'm putting on the same thing, and I'm either getting your pricing or a little bit better. Right. So right now I'm looking at my diamonds, I'm showing a $50 loss with all single contracts. I'm showing IWM with a small profit of maybe $40. The SPY, I'm showing a loss of about $135. All single contracts, following exactly what you were doing. So I guess between the commission costs and the little bit of loss, it seems like I've already locked it in, but I'm at a loss. Am I missing something?
Yeah, there's still premium left in there. When the premium starts to come out, you'll make up that difference.
Okay.
Yeah. There's also another strategy that I was using with the SPY. Basically, we sold two at two different strike prices yesterday or Monday. So at that point, because option premiums were cheap, we did a debit spread on the SPY. And I sold two options that were out of the money as part of that debit spread at two different strike prices. And so what I was anticipating was the SPY going a little bit higher. So then at that point, we can lock it in with a butterfly spread. But because you're locking it, just because you're locking it in doesn't mean that you're going to have, you're locking in basically the premium and the profits that you generated from the long call. And when you lock in the premiums from the long call, and then you sell another option at a higher price, and then also purchase another put at the higher price of that, you're basically locking in a butterfly spread. And at that point, and that's a really wide butterfly spread. I think I made it, I think it was like 7 or 8 strike prices away. But we'll go into the details a little bit more, but basically, and here's another thing too that's really important about trading is having a secondary plan, having a backup plan. So you're saying, okay, so the market has already gone up a lot because of the Trump rally, and then what happens if I buy now? Premiums are cheap, but I'm buying at the top of the market. So in other words, I'm buying this debit spread, and the market's ready to reverse. What do I do? What's my backup plan? And so with a debit spread or a credit spread, as long as you're buying cheap premium, you know, and if the market starts to decline, what happens to the premium? The premium goes up. And so now you can, the ones that you had that were out of the money, especially on the call side, you can buy those back and then write a lower striked call on the SPY to capture more premium. Does that make sense?
It does.
And you can eventually, I mean, the way, and also if you look at the delta, I mean, basically we're pretty much delta neutral. At least we were when I put those trades on. I think we're plus 18 right now on delta. So if the market goes up a little bit, we make a little bit more money. If it goes down a little bit, you know, we're going to lose a little bit, but we still have time premium left in a lot of these options, even with only 2 weeks left. But if you've got a long call at a lower strike price, and if you've sold options at a higher strike price, when those short options become, you know, make money for you as the market drops back a little bit or pulls back, you can buy those back and then sell a lower priced one, and then turn it into a butterfly. Or you can keep those and turn it into a very long-winged butterfly by adding additional calls at the top of that and selling another strike. So instead of concentrating the options that you've sold at, let's say, like in a typical butterfly, you would sell the, let's say you sell the 190s on the diamonds, and you buy the 195s and you buy the 185s, and you sell two of them at 190, you could sell the 190, you could sell the 195, and then buy the 200. So you could spread them out as well. And that gives you a pretty wide tent. Any other questions?
Yeah, I've got two questions.
Okay.
One of them, real quick, is and I don't have any of this in front of me, Dave, but you said you had a ratio 2-1 on I think the latest trade you did, or maybe the one before that, and you said, "Hey, I'm going to do this as individuals, not as a spread." I think that was the terminology you used, and if that's correct, I interpreted that as saying, look, I'm going to buy each of the three options independently, and I'm not going to bundle them together in a one price offering. That's correct?
That's correct.
Okay, so, well, and of course I didn't catch that, and I bundled them together. So what was the logic between going single versus bundling?
Yeah, that's a really good question. It's not something that was immediately obvious. That's a really, really good question. What I try to do is there's a certain risk in bundling or selling a number of different options, either at the same strike price or at the same time in the same order. And that has to do with assignment. So, for example, when the CBOE or the decides to assign options, they do it on a random basis, and they do it by option, by order, by certain order numbers. So, for example, if somebody wanted to, I mean, it's totally random the way they do this, and only 30% of options are ever actually exercised. I don't know if you knew that, but only 30%. But what they do is, let's say somebody wants to exercise two options that they own, and you enter both orders. If you enter a single order selling two options at one time, they would assign both of those because you had two of those. So your order ID was identical for both of those options that you sold. So typically, I mean, it's not a huge deal, but I like to do separate orders on many of the options if they're at the same strike price and I enter them at the same time. They do have different order IDs, but because they were entered at the same time, they tend to pop up and get exercised at the same time. If I do them as separate orders, then maybe one gets exercised and the other one wouldn't because it's a random pick during exercise.
Oh, well, I think I got it. So say I had a really large portfolio and I wanted to buy 20 contracts or 50 contracts.
Yeah, that's more of an issue because I used to do that. At one time, I had 100 contracts sold on an index, and they all got assigned. It was horrible.
Well, that rolls right into my second question. Is I got assigned on the Diamond 3-leg for January that we put on way back in, gosh, I don't know when it was, February, March, whatever. So, well, that was a lot of fun when that happened. But other than that, so now I'm sitting with, I think it's a 182 call and a 165 put. And the 182 call now is actually working out pretty well for me.
Yeah,
Hey, David,
forgive. Go ahead, I'm sorry.
a basic question about the XDR Pro sheet. Do you have a document that describes the different fields? I know you describe them a lot during the videos, but is there something I can refer to other than the videos?
Yeah, it's been a work in progress. It's gone through different iterations, so I don't have one. I have talked a lot about them in the videos, and there was one video that I did I think that I had it on the XTR Pro spreadsheet download page, but let me check that. Yeah, if you go to the tab at the top of Tradingology member area and it says how to trade, there is a detailed description of each one of the columns in that video. I need to update that though because we have added a couple of columns and the new version of the spreadsheet has some additional columns in there that haven't been described. But go to that page. It says how to trade. And then the video is titled How to Trade XTR Pro Trader Signals. And the video goes through each of the columns one by one.
Okay, I'll take a look.
Phil, you had a question?
Yeah, two things real quick. I don't know if this is a personal admin thing on my side, but I have full access to the site, which I've always had, but for whatever reason, you referenced the signal spreadsheet and it's telling me I don't have access. I have access everywhere else on the site, but not there. So I don't know if it's a generic issue or just something related to me.
Okay, I'll have Carol look into that, and she'll get you set up.
Okay, and then the other question was, I guess I don't fully understand what happens when the option gets assigned.
So what happens is that typically the assignments take place after the close of the market, and it's done on a random basis. So if you have an option that's in the money, typically, I mean, very few people are going to exercise an option that's out of the money, only because, they're going to be paying for something that at a lower price or at a higher price than they should have. So they're not going to exercise an option that's out of the money. And so it's done randomly after the close of the market. You're assigned that evening, and the next morning you actually get those shares of stock in your account the very next day. So let's say you're short one option in the diamonds, they will assign you 100 shares of stock if your number comes up on the assignment lottery. and you have 100 shares of the diamonds. You're short 100 shares of the diamonds in your account. So
Which means they would have to debit my account for that amount of money, though, right?
that's correct. Now, if you don't have the amount of money in your account in order to cover that assignment, then they will liquidate the stock in the market. So basically, I mean, unless the market moves really very quickly on you, you still have the protection of the long call against that. But you know, you may end up losing a little bit. It depends on how fast the market moves.
Okay.
But it's not typically something to worry about as long as you have calls protecting that position. If the market does make a big move, you should have enough delta to cover most of the move. Depends on how fast it moves.
Okay.
A lot of people worry about assignment, but I've never really had too many problems except the time I was short. I was short 100 contracts. That was a bit of a hairy situation. Anybody else? All right.
I guess I have one more question.
Sure.
And that is, when do you keep kind of track of your trades in terms of profitability? Or, you know, over time, is there a spot we can go to look at that?
No, at one time I did share in all the videos that I did with trading as a business. It was my real account, and the way you can tell it was a real account was if you look at Thinkorswim, all of their demo accounts start with a D and have a dash in front of it. And I remember doing those when I did those videos. I wanted to show everybody that it was a real money account and that I was actually profitable doing these trades. And I got a call from Thinkorswim, and about it wasn't even like it was like 3 years after I did them. And I think it was 2011 or something like that. And they called me and they said, you cannot show your account in any video in the future or we will sue you. And I said, okay. And they said, well, there's two reasons. Number one is you're showing your actual account number in those, which is, you know, a little dangerous. But second, everyone got to see the commissions I was paying. And I didn't realize it, but I paid far less in commissions on an individual basis on every single trade than most people could get because of the size of my account. And so they were a little upset with me. And so I promised them I would not do anymore. I would not show my live account to anybody. So I do have a, and people have asked me for like statements and stuff like that, and I just don't feel comfortable, I guess, you know, showing those kind of personal details. I'll let you know though that I'm consistently profitable. I stopped doing monthly income trades in 2009. And then I started up again in 2011, but I only did it sporadically. I traded mostly futures contracts.
So since 2011, you've been steadily profitable with the options?
No, I've been experimenting with different things, and I traded mostly futures contracts because my lifestyle has changed completely. So I can't sit in front of the computer all day like I used to. But the important thing is that you see, let's say you see me doing monthly option trades, and I'm making, you know, just as an example, you know, $5,000 to $7,000 a month in income with option trades, just doing the same kind of monthly option income trades. And in order to do that $5,000 to $7,000 a month, I had to do 40, 50, 60 contracts. Not everybody is able to do 40, 50, 60 contracts. Maybe they can do 5 contracts or 10 contracts a month. And so, everybody's financial situation is going to be a little bit different. And also, you take a look at the numbers and you take a look at the trades I did, and you won't understand them. Even as I'm doing them now on Tradingology, and I list exactly the trade that I'm entering, a lot of the members do not understand exactly why I'm entering that particular trade. And so you could take a look at the spreadsheet of all of my trades and still not figure out what I'm doing or why I'm doing it. And so I think, and I have no idea. I remember one reseller of mine wanted my statements from the brokerage to prove that I was a successful trader and a profitable trader, but I was advised by my attorney not to give them to him because I have no idea what he's going to use those for. And so typically that's why I don't give them out, because I have no idea where they're going to end up. I mean, if I transmit them over the internet and I give them to this guy and then he uses them in order to sell a program of his that has nothing to do with my trading. It's a bad precedent to start. I mean, he could use them in a fraudulent way, and I would never know.
Yeah, I wasn't really looking to see how much you make, but just more the success of the overall approach and how consistent it is.
Yeah, I just started using XTR Pro spreadsheet with the monthly income trades, though. I mean, that is brand new. I've been trading futures mostly, and I've been trading some debit spreads and some credit spreads.
So Dave, when you're giving us these trades that you're putting on, and you're just showing us, okay, I'm selling 2 here, I'm buying 1 here, buying 1 there. Are you doing single contracts, or are you just giving us that as the example of your trade and you're doing multiples?
Yeah, I those are only examples. I tend to stick to 1 contract because I have no idea of individual members. I mean, let's say an individual member who has a $20,000 account, and they see me putting on 10 or 20 contracts at a time. They're thinking, well, do I have to put on 10 or 20 contracts at a time in order to mimic what he's doing? I understand that most people need to be responsible for their own trading decisions, and they're going to say, "Oh, Dave's putting on 10 or 20 contracts, but I'm only going to put on 1, or I put on 3, and maybe 3 is too much for him." So that's typically why I only put on 1 contract. But yes, I do put on multiple contracts.
Okay, but for a little guy like me that's following you, if I'm mimicking what you're doing, even doing single contracts, I still should come out ahead, even with commission and all that.
Yeah, because we're only doing 1 adjustment. I would say if in the 2008 period when I was doing monthly income trades and doing multiple adjustments, if you had a $10,000 account, those adjustments can eat up a lot of profits. I had at that time in 2008, my account was $450,000. So I was doing in the spreadsheet in the videos. I had 2 demo accounts, one with $25,000 in it, where I did simple trades because I kind of understood this concept that people would try to follow me. And then in follow-up videos, I had another account where I had about $250,000 in it. And I was doing a little bit larger trades, but I was still aware of the fact that a smaller account size would get eaten up with all the adjustments that had to be made.
Okay, which makes sense. But just to reiterate, so if I'm doing singles following you now, I'm okay. At least for the time being.
Yes, absolutely. Absolutely, because what I'm doing now is it's much more. The costs are much less. There's fewer adjustments, Although there are, as you've seen, we're doing multiple trades.
Yes.
Yeah.
Okay, thank you.
Yep. We're pretty much done for December, I think, as far as entering trades, because we're getting closer to expiration. But we've still got a couple more to put on for January.
So
one more. Go ahead. Sorry.
I'm sorry, just one last quick question.
Sure, Phil.
You're talking about, the market possibly pulling back. Are some of the trades you're going to put on, I assume, going to capitalize on that potential?
Yeah. So as soon as we see, we're pretty well set for December if the market pulls back, because one of the things that I'm going to show, I'll probably show it in tonight's video for the members area, is the tent that we're creating. So you may not see it as I put on the trades, but if you go to, are you using Thinkorswim, Phil?
I am.
Okay, so if you put your trades into the Analyze tab, can you see the tent that we're creating by the trades that we're entering? Have you done that?
I have not played around with it because my account's pretty polluted. Meaning I have other stuff in there besides just what I'm doing with you.
Okay, well, I can show you how to eliminate some of that and just kind of get down. So, for example, when you go into the Analyze tab, you can uncheck some of the things that you have in there, and you can also uncheck the ones for different months. So what I'll do is I'll do a video tonight for the members area, and you'll be able to see that how you can use the Analyze tab just to look at your December expiration options and trades. And then you can look just at the January, and then you can look at the combined. I like the Analyze tab a lot in Thinkorswim. The problem is that, if you combine everything together, it looks like a jumbled mess. You're not really sure if you're going to be making money or not. But what I'll do is I'll go through the video and I'll show you how to uncheck stuff so that you can just look at the things that you want to look at. And when you see what we're doing for December, you'll see the tent developing, and you'll see that it's basically, it is structured right now so that we are going, if we do get a pullback of any kind, we're going to be profitable for the month. There's no doubt about it.
Okay, and you did show a little bit of that in the video the other night. I see how to do that now, but if I'm going to do it, should I be looking at just the diamond, or can I look at diamond, the Russell, and the SPY all together as long as I'm just looking at December?
Yes, you can absolutely do that. Yep. So you'd have each one of those marked. You'd have them checked off, and then you uncheck the ones for January, and you just want to show the ones for December, and then you'll see what your real picture is on the Analyze tab for December.
Okay, thank you.
I'll do a video again tonight and just kind of go through it a little bit slower so everybody can kind of pick up on that. But it's pretty easy to do.
It looks like we only have January for IWM anyway right now.
Yeah, I believe so. I think it's just diamonds and the, let me double check. I think it's just diamonds and the SPY for December.
Correct.
Yep. Yep, that's right.
Okay, thank you.
Yep. Okay, any final questions? And then we're gonna get into the last part of the session today. I do want to get all your questions out of the way, though, but go ahead.
And that is, are you still doing three-legged box spreads, and how does they fit into the overall process that we're going to be using?
I do three-legged box spreads personally, but I haven't done one in a while, only because I've been working so hard on the spreadsheet. I'm really getting to the point where it's really great as a short-term market timer, so I can tell over the next 2 to 3 days whether we're going to have a pullback or the market's going to go higher. But it's a little bit more difficult to do a long-term projection. So if I want to do three-legged box spreads, typically those kind of spreads, I want to go for 3 months, 6 months, or a year. So I'm still kind of working on that. So I've laid off. I love the three-legged box spread though, but the truth is I would rather do a synthetic stock position. I mean, I'm able to do a synthetic stock position with options without the benefit of the long call or put as protection. So I tend to like those a lot. But it's basically the same thing as a three-legged box spread position, but without the protection. Do you understand? You understand what I mean by that, or no?
I don't, but
Okay, so for example, a three-legged box spread, a short three-legged box spread position is a short call, a long put at approximately the same strike price or the same strike price, and then a long call at a higher strike price than the one that you sold. Right?
yeah.
So typically, I would not buy that extra call. I would only be short the call and long the put if I wanted to go short. And essentially, that is a synthetic short stock position. If I put them on at this very same strike price, then the delta is exactly minus 100. So I would be able to profit a point by point drop in the diamonds if I put that on the diamonds. If I wanted to go long because I'm not protecting that short call, the margin requirements are quite high, are very high. And so the only reason to put on that protection, that long call at a higher strike price, is to reduce your margin requirement.
Yeah, I remember that.
Yeah.
Yeah. And that's for the three-legged box spread that you're saying.
Basically,
Rather just
that's right.
synthetic without the protection.
That's right.
Which is basically a spread, isn't it?
Yeah, it's either a short or long spread, but the delta is almost, it's 100, so it's a substitute for stock.
Yeah. Okay.
Any other questions, guys? I do want to answer all of your questions. I want to give you as much time as you need. We good for today?
Yep, good.
Yes, I think so. Thank you.
Okay, great. So what we're going to do then is it's really important, I think, everybody has a trading plan. Does anybody have a written trading plan?
Anybody have a what? Say it again.
A written trading plan? A trading plan that you have written out?
No.
Anybody else? Tony?
No.
No.
Okay. Tim? No?
No?
Okay. So I'm going to basically give you an outline and step-by-step of a trading plan. And this is going to be in a file that we're going to send you as a follow-up to this session. So you don't have to worry about writing anything down, okay? It's just something that to think about. So because a lot of you guys are working, your time is limited to the amount of time that you can devote to trading. And so when you think about a trading plan, always keep that in mind. In fact, it's one of the aspects of a written trading plan. But this is all going to be typed up. It's going to be put into a Word document, and it's going to be sent to you guys. And then for the next session, if you could at least think about some of the items on this trading plan and kind of fill in the blanks on each one of these items, and kind of come prepared to discuss these, okay? Number one is that you need to understand the amount of time that you have to trade. So think about the times that you're available to trade and when you can make your adjustments, when you can actually put on trades, times of the day, that kind of thing. It's very important because if you're a very active trader, obviously, you're not going to be able to, maybe if you're working, you're not going to be able to, look at a computer at 11 o'clock in the morning or 3 o'clock in the afternoon sometimes and be able to make an adjustment. So you need to think about the specific times that you're able to trade. Number two, you have to decide which markets you're going to be trading. Are you going to be trading, just futures? Are you going to be trading just options? Are you going to be trading both? Number three is determine exactly which financial instruments you are going to be trading. So for example, I trade almost all of the stock indexes and options, and I only trade the YM in futures. So think about the financial instruments that you're actually going to be trading. Even though what we do in Tradingology is almost always on the indexes, the same strategies can be used on individual stocks. So think about that. Identify which market indicators you're going to be using in order to determine when to enter a trade. Number 5, decide ahead of time how many contracts or how many shares or how many lots you're going to be purchasing when you do enter a trade. And so only you can determine that. That's something that you have to think about as far as your portfolio size goes. Typically, as far as margin requirements go, I typically trade about 10% of my overall portfolio. Number 6, you need to set specific price entry points. And so XTR Pro Trader basically does that for me. But there are other ways to do it. So if you're using support and resistance areas or other ways of entering a trade, you need to think about exactly how you determine what your entry point is going to be. And then you're going to write down, number 7 is the process you're going to use to monitor each trade. How many of you guys use your phone right now in order to monitor the markets?
I do.
Yep.
I do.
Yeah, I think everybody is mobile these days. So, and I do it too when I'm out. I'm always looking at the market on my phone. And it's a good way to monitor your trades, although it's very difficult to trade. I think I've tried trading futures on my phone. It's impossible. It's just I can't do it. Some guys can, I guess, but it's not for me. So all of this is very individual. You have to think about your own personal preferences and your own time constraints and the size of your portfolio for some of these things. Number 8, decide on the parameters for the trade exits. So when you're deciding on entering a trade, it's probably best to determine what your exit is going to be at the time that you enter it. So you have to determine what will trigger an exit for you. And then finally, number 10, evaluate your trading plan. That includes keeping track of your costs, your profit and losses, and how you're going to actually keep track of that. But it can be, it can simply be in Thinkorswim. You can print out a report for that day at the end of the trading day, and you can keep that in a file. There's lots of ways to do that. So I'm going to type this up, these 10 steps. I'm going to send them to you. And I'm also going to do the same thing, and I'll show you exactly what my trading plan is. And then we'll get together in the next session, and we'll kind of read from each other's trading plan. Sound like a plan?
Yep.
Good.
Yeah.
Sounds good. All right, guys, thanks so much for joining me. I really appreciate it. This was a lot of fun. I can't wait to see you in the next session. If Thursday works pretty good for you guys, we can do this. We'll do it again next Thursday, same time, 1 p.m. And you can use the same URL, and we'll get together then. Going forward after that, I think we've got a couple weeks. We've got 3 weeks before Christmas holidays here in the U.S., so we might go 2 weeks and then skip a week and then start up in the beginning of the new year. But I'm going to give you another assignment next week, and we'll continue to work on our plan. One last question before you go. Phil is following the trades on Tradingology. Are all you guys following the trades on Tradingology right now?
Yes.
Yep.
Yeah.
Yes.
Okay, great. I'm going to do the video tonight showing you the tent of what the profitability looks like for December expiration and for January expiration, and I'll show you how it looks according to the spreadsheet as well. So, hey guys, thank you again. Thank you so much for joining me, and I'll see you guys next Thursday at the same time.
Hey, Dave.
Thanks, Dave.
You're welcome.
Thanks, Dave.
Thank you.
Oh, you're very welcome, guys. All right, take care, and we'll see you next Thursday.
All right.
Thank you.
You're
Bye,
welcome.
thank you.
Hey, Dave.
Yes.
Hey, do you have a minute to visit?
Yeah, sure.
Okay, not everybody knows.
I can hang up here.